This video is brought to you by Blue Guardian, the only prop firm that protects their traders.
Boom, again with the news that came out. If you had buy stops and sell stops, you would have gotten flushed out of the market both ways and you would have lost money. Why did I also look to buy it here? Well, pull a trend line. 1, 2, 3 touches of this trend line. Retail's going short. There's buy side liquidity. We're in both of these. Congrats. Huge potential. 1 to 7, almost 1 to 8, and then 1 to 3, almost 1 to 3.5. Up to 143.5. If you target the higher high, definitely a higher risk to reward. All right, fellow traders, I'm just gonna give it to you straight. Okay, we have tons and tons of setups to discuss today. So guys, if you cannot spend the next 60 minutes focused, willing to take notes, having your computer open that you can mark off all of these levels, come back another day. I promise you're not going to want to miss out. All right, so we have tons of setups to go over, many of which have been discussed on prior pre-market analysis videos and also throughout the week within our VIP community. We have tons already playing out. I'm gonna go over all of them and future setups coming up that I think are very much probable for the upcoming week. So guys, if you resonate with the simplicity of this strategy and want to take it a step further, not only learning how we trade from a step-by-step basis, but also receiving daily trade ideas and pieces of analysis to guide you along your trading journey to help with that application side of it, definitely head over to my website, Aerial FX Trading, and check us out. Book a free call with us. We would love to speak with you about how we can best assist you if we can to begin with. If we can, great. We would love to get you a part of the community. If not, no worries. We'll send you on your way and I'll give you my trading plan for free that outlines exactly how I trade. All right, guys. So definitely for the next 60 minutes or so, depending on how long this video is, stay tuned, follow along, take good notes, because every single pre-market analysis video that I make, so many of these setups are playing out. Of course, we're not going to win them all. No one does, but the majority of them will with high risk to reward.
Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and overtrading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
So let's start off by talking about the US dollar. Let's go to the higher time frame. We are still overall bearish. And like I said a couple Fridays ago when I created the last pre-market analysis video, which by the way, I did not do one last week. I guess my sound was not working properly, so I do apologize. But anyways, we were talking about this level of supply. We can see that within this downtrend, lower low, lower high, lower low, what do we naturally expect? A lower high, okay? Where's the counter trend? Here, high, low, high, low, high, low. We failed to generate a higher high and made the overall lower low. This is the last buying volume before that structure was shifted. Therefore, this becomes the supply level. We also have this level of supply here. Wasn't quite mitigated, but we have this last buying volume as well. So maybe we have one more final push up into the high, but overall, I'm expecting dollar weakness, which is likely to take XXX long. All right. We also have higher time frame objectives. What do I mean by that? Well, we're likely to target liquidity. That's where price moves and very quickly. So here we targeted sell side liquidity, these relatively equal lows. And at the same time, now we're looking for further shorts as a catalyst to drive price lower to take out this previous swing low as well, which are relatively equal to this low. So definitely looking to experience shorts, not to say that it's going to happen next week or it's going to happen immediately. It may take some time. We may start to distribute, but overall, I still like dollar weakness for a lot of not only technical, but economical reasons as well. Macroeconomics would favor dollar weakness. When it comes down to, Saudi Arabia and oil and, now we're not accepting oil in US dollars and all that good stuff. So heading over to Aussie dollar. So with that bias in mind, we are looking for overall longs, like I said, on XXXUSD. Now, how do we not necessarily know, because no one's 100%, but put together probabilities for this? Well, first and foremost, what screams buys to me long-term are first and foremost these equal highs, These are equal highs. This is resistance, liquidity, right? We're looking to attack that liquidity. We're overall bullish, okay? And we have sell side liquidity to run first, building that up before the large orders can come into the market and take price long. We have NFP coming next week. Very key indication that we're probably going to experience some sort of heavy manipulation at the end of next week to drive price in its overall direction. So a quick breakdown on AUDUSD. We talked about this plenty of times on prior pre-market analysis videos, but I'll go over it very quickly. And if you guys don't get all the information you need, you can feel free to go over on your screen, on your computer or your phone, and look at these levels on your own time. Anyways, this right in here, around 6.2, we can see how that came into 6,200 very, very nicely. This is a higher time frame level of demand. I'm not going to go over everything for the sake of time, but we came into that level and had the reaction, right? We broke the structure to the upside. Now we understood that we understand that we have to look for the counter trend when determining where price is likely to pull back into before continuing in the overall direction of the trend. So if the overall direction is bullish, where are we looking to pull back into? Well, that's where the counter trend flipped, in this case, from supply to demand. So here we have a low, we have a high, we have a low, we have a high, and we failed to generate the lower low and then experience that higher high. And obviously this last selling volume was within this overall demand as well. So that's exactly where we're looking for price to come into. So around that 6.520 level. And look what happens before we come into this level. Before we come into this discounted level of price, of course, we have to build liquidity. That's how the big institutions and banks are able to generate enough liquidity for their contracts to be placed at the right spots to where they can move price in the overall direction. So they build liquidity. They have this low here. They come back down again, maybe fake break of structure, enticing buyers, just generating more liquidity on the opposite side of the market so that they can come into that, sweep it, free up the liquidity so that they can place their orders. So now there's enough people on the other side of the market to accept their orders that the banks and institutions place, if that makes sense. And if it doesn't, we break it down very simplistically within our mentorship program, within our courses, to help you fully understand not just what you're seeing, but why stuff like this happens. So anyways, we have one touch here, two touches here, and then we can see we had relatively equal lows. But then we came back up, swept buy side liquidity, right? Attacking buy side, attacking sell side, and then attacking buy side again. So that buy to sell to buy, type 2 manipulation we discuss within our mentorship. Anyways, we come back down. So that second touch, third touch, we break. So enticing retail shorts below that trend line, which just doesn't make any sense. Then the retest, again, attracting more sellers into the market, and boom, right back up to the upside, sweeping retail, whoever was going short, sweeping their stop losses. All right, we can also see that the buildup of liquidity, lower time frame, we broke. Again, we sort of retested, creating this little reaction. Also the repricing from this level of supply. If I scale into a lower time frame, you'll be able to see that. All we do is look for the counter trend again. Low, high, low, high, low, high. Failed to generate the lower low. Instead, we made the higher high. So that will create that level of demand. But just in case we don't pull back all the way into 6,520, we have 6,560. This is just the last overall selling volume before we broke structure to the upside and started to make higher highs and higher lows. So that's exactly what happened, right? This is our level. We're generating equal lows here. We're generating equal lows here. So overall, I still think that the dollar may have one final push to the downside before going long, meaning dollar strength and then overall dollar weakness. So XXX USD, last push to the downside, sweeping sell side and then going long. However, because of the fact that we had equal lows and an unmitigated objective on the hourly time frame, we were able to identify a counter trend opportunity that, again, just following the overall concepts and structure of the market, just doing the same thing just on a lower time frame and counter trend, right? The markets are fractal. Everything happens on every time frame, overall or counter trend, right? So within here, we had a low, we had a high, and then another lower low. So I would never have taken price off of like anything in here. Even if there was a clear supply, I would never have done that. Why? Because there was no indication that we would be going short. We have equal highs. We're overall still bullish. I would never look to sell it. Now, the fact that, sorry guys, I get messages sometimes during videos. Anyways, we have these highs that were run and we failed to generate the higher high, instead making the lower low. So now in my perspective, my opinion, we're in this counter trend phase. So we're likely to have that 1, 2, 3 drive into the objectives into sell side liquidity. So that's exactly why we took the short here. From anyone who is involved in our profit automation signal service or the VIP analysis, or maybe I even discussed this on, I know I did not because we didn't have one last week. I thought I may have discussed this on a previous pre-market analysis, but I guess I didn't. Anyways, this last buying volume in here, filling up the imbalance, lower low, lower high again, generating liquidity. This wedge, retail is involved in this wedge. Look, 1, 2 touches here, 1, 2, 3, almost 4 touches here. We're wedging ourselves. Oh, we break out. Coming into that supply, retail buys, we short. Okay, that's why we had that risk reward there. Nice almost 1 to 6, 1 to 5.5. Anyways, we fall. We come back down again into this sort of trend line here, had a little bit of a reaction and then make the overall lower low. So the structure becomes high, low, high, low. And we haven't reached this level down here yet. So if we get a pullback, I like this intermediate level of supply for shorts. And I also like an imbalance up here if we get a deeper retracement into 6, 7, 80 for potential shorts, and then overall longs from these two levels down in here for a higher time frame swing to the upside. So definitely maybe short-term shorts and then long-term longs is what I definitely expect. And we're going to see a very similar theme throughout all these dollar-based pairs going forward. CHFJPY, I did talk about this. I think this was maybe 2 or 3 pre-market analysis videos ago. But again, it still goes to show how it's so important to keep up with all of these videos, guys. I say it every week. If you're not keeping up with them, I really recommend doing so. You're really not going to want to miss out on this stuff, guys. Because sometimes it doesn't play out immediately. We can't expect it to. It's not always going to happen like that. But we have to keep these levels, if they're still valid, in the back of our minds, so that if price comes back down into them and they're still valid, we can still remember and take advantage of them. So CHFJPY, overall, XXXJPY is extremely bullish. We'll see that across the board. We've been looking for XXXJPY buys like EJ, UJ, GJ, and CHFJ here. So within this swing, we have a high, we have a low. We came back down into this swing structure here, right? Tapped into that. And then within the counter trend, low, high, all the way down, et cetera, et cetera. This was that last selling volume that failed to generate the lower low, and that's where we had the expansion and the higher high. So that would be our demand. We came up, created another higher high, generated buy and sell side liquidity. News came out, huge push to the downside. Again, news is just used as the excuse to manipulate price, to push it in its overall direction, to push it in the opposite direction, to mitigate an order, to do X, Y, and Z, right? There's always a reason for every movement in the market, okay? Nothing is random. So we push down, we come into this level, and then we have an expansion to the upside. And now I think we're going to go long. Now I do believe that since this is a high, a low, a high, and a low, we've mitigated our last selling volume. So AKA that demand, we've maintained our bullish structure. I do think that any pullback would be fine for continuations. And we have relatively, I wouldn't say equal highs, but the buy side liquidity to run, and we're overall bullish anyways. We scale into a lower time frame. What we'll notice is that price, let's go to the 10-minute, that looks better. We can see that again, when price came into it, originally, we generated more liquidity and created this huge push up, enticing buyers, right? Because people are probably placing their buy stops and then their sell stops. So maybe we attack sell side first with that wick, go long, take the stops, attack the buy stops, come back down, take their stops. If you are placing buy and sell stops before news, I'm sorry, but that is the dumbest thing you can do, and you should not be trading, okay? This is not something that you should be gambling your money away. If you don't know how to trade, learn how to do it, find a mentor, or just stop trading, because people will literally blow their account and lose all their life savings doing crap like this. Don't do it. So when we see this happen, we understand there's manipulation behind it. So we're not involved in this. Or if we're buying from this level, here at 159.75, which is where I got in, then we don't have to worry about all the noise because our stop loss is below the overall low, right? So we don't care about all the choppiness. But now that we see the overall manipulation occur and we see the expansion afterwards, I don't think that it's necessary for price to come back down anymore. Now, what I would like to see is definitely something like this. Now, I'll just extend this over, okay? So we can see this support turns into resistance here. So what does this tell me? This tells me that retail is probably looking for the break and a retest of this support level, or this previous support. So if we have a reaction and we come back down into an already predetermined level that we're looking for anyway, then that gives us more of a reason to buy, because now retail is involved in shorts. We got to go take that liquidity. So that tells me that we're probably likely to go long. So we have 161 psychological level just within this overall expansion. And then we really have this last selling volume that failed to generate the lower low. You could also say that it's like right here as well. That's the last selling volume. But we have 161 and 160.5. So I just like those psychological levels. Anyways, just anywhere in this range, in my opinion, are good for longs. All right.
All right, folks, I'm here at Black Bull Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade one lot a month at Black Bull Markets, and they're going to give you free TradingView Pro. So, folks, to find out more, click the link in the description below or the card above.
So, continuing here, EURNZD. So with EURNZD on the higher time frame, we are extremely bullish, right? And it's likely now that we are probably going to take this previous swing high. We have relatively equal highs here. Price has failed to generate any sort of lower low. We're still trending up. We did come up into a higher time frame level of supply, but we never broke structure. Just because we come up into supply, I mean, yeah, you can look for shorts counter trend, maybe some sort of failure to generate the higher high and the lower low. So you may look for shorts. However, we're still bullish. And now that we've pretty much come up almost to 100% of the way, I do think that we're going to run out this high. So any buys are definitely in order, in my opinion, which is why when we stopped right there, created that perfectly equal high, essentially, and then we had the reaction lower, I didn't think that we were going to go short upon a break of this structure here. This would most likely just be a sell side liquidity run for continuations. And that's exactly what I said to my VIP community. I said that we could do a couple of things. When price closed here on Friday, turned into Sunday, I said, well, we could follow the lower time frame, high, low, high, maybe into this demand right there, and then create another, higher high for like high, low, just lower time frame continuations. Or we come back down into, let me find it. I don't know where it is. Hey, I'm losing my tools here, guys. There we go. Or into this level here, because we could sweep sell side liquidity, which would be sweeping these lows to the start of the week and then continuing into that last selling volume here that came into this supply, right, from the prior structure. We could have done that, or we could have come into this level. This was the level in which was the last repricing before we went long, before we failed to generate any lower low within this push here, and that's where we broke the structure. So there's just, on a higher time frame, it's just imbalance. There wasn't a real reaction from it to create that demand, but we can see when that happens, when there's no reaction or just bust right through, that would be called the inside demand, or in that case, inside supply, before it flipped to demand, which it has now. We can also see that prior to coming into this level, we generate this skewed head and shoulders. Fake out lower, go long. Retail's trapped short. Retail's probably selling short at this resistance. Also, when we come down in here, provides more confluence because now we have buy-side liquidity to take. See, it's all about generating confluences and understanding just the basic components and principles of smart money and supply and demand. Then it just comes down to following your plan, guys, because you're not going to win every trade. You're not going to make $1 million every single time you trade. You're not going to just see your account every single trade win. That's just not how it works, right? Losing is a part of the game. It is a part of it. You have to be willing to accept failure and losses before you can see overall profitability, right? You may have this setup right here may look the exact same 2 weeks later on another pair, or maybe even on the same pair. Maybe this one works out, maybe the next time it doesn't, right? That is why it's so important that you stick to your trading plan. So it doesn't matter if you win or lose, because overall, you know your strategy works for you. And then if you maintain proper risk management, you're going to be fine, right? Because I've had beautiful setups still lose for me, but I maintain my psychology. I use the same risk every time, and I keep attacking the market the same way when my setup is met again. When my rules are met and confluences are there, I attack it again regardless of the overall result, because I know my strategy is overall profitable, right? So again, boom, there happens to be a winner. So looking for retracements, what we could see either is one more final sweep of the low. Now, you may ask, well, we already come into this level. Why shouldn't we just pull back and go long? Now, of course, that could happen, right? Sure, we've broken the counter trend. We could come into demand and then go long, right? That's definitely a possibility. But what else is a possibility? Well, this occurred on Thursday/Friday, so end of week. So what we could do is still, we've run buy side. We could run sell side to start the week, have one final manipulative push, and then go long. So this would still make sense because it would still be following the structure. High, low, high. It's still within the structure. That's why we can have intraday, intra-week manipulative moves that still follow the overall structure, that still maintain the overall order blocks, right? So we can't be scared of that happening. Now, that's why, putting stops to break even, if you want to cover yourself, by all means, if you want to take some partials, move stop to break even, whatever, but don't be surprised if it does come back down. It may not. It may just continue long, and if you're already in this, great. But if not, it may sweep it and then run it again. So we just have to be careful, okay? Overall, this should go long. We should take out buy side. But again, just goes to show. I don't really have an additional setup. We'll just have to wait until next week. EURGBP. So with EURGBP on the higher time frame, we have come down into this last selling volume. So we had a low, a high, a low, a high, a low, a high. We failed, higher high. I would not classify this as a break of structure. It's more of just like a liquidity run for a potential continuation. It just came back down into that level. So I didn't buy it from there, but the fact that we generated liquidity prior to that level here, and then we swept the liquidity and then broke the counter trend structure to the upside here, that tells me that at least short term, we probably should be bullish. Okay, swept liquidity, counter trend was broken, low, high, failed to make the lower low, higher high. That will turn into demand. Higher high. And now where is our potential buy side objective to where if price is going to go short, where would it go short from? Well, you just zoom out, right? You have your expansion, pullback, expansion, pullback, expansion, pullback. That's the last buying volume right there. That's the supply level around 875 or 876, okay? Because that was the pullback. This was the pullback. Now this is probably the pullback. Now I'm not saying to just short it right there. I'm just saying that if you have buy side objectives, meaning right here, and you have an opportunity to buy because your confluences are met, we haven't come into this level yet. So it still creates a higher probable setup to buy it, right? The game is all about probabilities and not about guarantees, because nothing in this industry is any sort of guarantee. So if price is going to sell off, it probably should from this level, but we're looking for buys anyway, so we're fine. All right, I'm not saying that it's going to go long, but the probabilities are in our favor. So we came back down into this overall level of demand, and what we also did was we wedged ourselves, created, first of all, equal highs, but see 1, 2, 3 touches, 1, 2, 3, 4, 5 touches, and then we broke. So that tells me, okay, the retail is probably involved in the breakout of the wedge. So not only are they selling right in here, but also they're probably selling upon the retest of where they broke out. Retest, and now it should start to go long. Maybe we're just accumulating. We may sweep this low here, so my stops have to go below that low, right? We could sweep it, start to accumulate, and then go long, right? And at that point, when we break the structure or even fail to generate a lower low and then a higher high again, we can have confidence to continue to buy this. Right, that's how we can take a higher time frame bias, scale into a lower time frame, and find additional entries with higher risk to reward. Okay, so looking for overall longs on EG. Now this is going to contradict our GU bias because we're looking to buy GU and EG, and they're obviously not correlated with each other. But what it could also do is act as a hedge. Right, if you're buying EG and buying GU, you're probably going to be right on one of them. Right. So with the risk to reward, if you lose 1% on one of them and win the other one at a 1 to 3, well, there you go. 3% minus 1% is 2% gain net. So that's why hedging is still good as long as you treat each trade as its own and you build your confluences for every single trade. Okay. So that's EG, EURUSD. So again, we're looking for longs overall. We may have some short-term dollar strength that would push EURUSD down a little bit, and that's something that we could potentially see. So overall, if I go to the higher time frame, we have, there's an area of supply up in here, not very obvious, 1.13, that's a psychological level, also potentially 1.17, that's the last buying volume here that failed to generate the higher high before making the lower low. We came into a higher time frame objective anyway, so I would definitely expect a higher high anyway. So we're still looking for overall longs. Yeah, definitely looking for continuations. Okay. So we have the possibility. Now, if you look at it from the structural standpoint, we have a high, we have a low, we have a high, we have a low, we have a high. So could we follow this lower time frame trend and go like that? Yeah. Could we also go like this? High, low, high, low, high? Sure. So because that's the structure, if you think this is a break of structure, you're probably wrong, because it's more likely just an overall retracement sweeping sell side coming into this accumulation. And we actually might come back down into that last selling volume there, which would be the overall retracement. So in and around that 1.07778 level. That's the potential if we continue to fall. If we don't continue to fall and we have just continuations from this sort of structure level, then we could potentially see price come back down into the last selling volume here, 1.09 psychological level. And then also within this, I think it's the 15 minute, maybe the 10 minute, really right in here, this huge impulsive move. It's better seen on the hourly time frame. It's just a huge imbalance. But this level here around 1.0930 psychological level as well, we could come back down into that. So we could sweep previous week's low, which would be right here to start the week, and then go long. That's something we could see, right? However, if we don't do that and we stop, right, and we stop here and then go long, I'm not looking to buy from here, but I would be looking to see if we have any reaction from that and then another higher high above this level. That would tell me, okay, we failed to generate the lower low, make a higher high, now we may pull back for a third drive. So looking at it that way, because technically we didn't come into objective yet, we could still come lower and sweep liquidity before longing, or we wait for the failure and then the higher high and then pull back to buy it. That's definitely a possibility, okay? Still, these two levels are valid anyways. All right, EUROCAD, same sort of deal as EURUSD. We still haven't come back down into objective. So looking at it from structure, high, this low failed to generate the lower low below this level and happened to react off the demand, made the higher high, the higher low, the higher high. This is all just one expansion. This is all one pullback. So where's the last selling volume? Where's that counter trend? Well, we look at it from here. You can see it clearly. Low, high, low, and this is really where we failed, and then we expanded and made that higher high. So filling up the imbalance, coming back down into that demand, we could see that last final run on the lows and then go long. So definitely we'll look for something like that come next week if we can get a retracement, because technically we're still in this pullback phase. So we'll just have to see. Nothing too pertinent at the moment on EUROCAD. GBPCAD, so same sort of deal. I mentioned this halfway through the week to my VIP members. I said that we have 3 potential levels that GBPCAD can come into. Let's first start off by talking about the higher time frame. So within the higher time frame, we are definitely bullish, no doubt about it. We are pushing higher and higher and higher. We're making higher highs and higher lows. We have come down and tapped into that daily 50 EMA, capping price at that dynamic support. We also have this previous high that we pretty much created relatively equal highs for. I think that will be the target as buy side liquidity. So anywhere from like 173.4 to 174 is probably a good take profit for any longs. All right, so in addition, we can see that we have equal highs here, buy side liquidity. Also, in terms of structure, we can look at it from this perspective. The low here was run out, sell to buy, higher high, came back down, mitigated that demand, in the process sweeping these equal lows. Sweeping the liquidity, higher high broke the counter trend. We failed to generate the lower low as expected because that counter trend was broken. And in the process, sweep short-term sell-side liquidity into the imbalance. And also if you scale into that lower time frame demand, there's like repricing in there as well. But also, more importantly, the low, the high, the low, the high, the low, and then we just bust right through it and we break the structure. So there's no real like demand per se on this time frame. If you scale in, there may be like some sort of repricing, but just anywhere in here below that previous swing low into that imbalance is where price ended up mitigating after breaking the structure here. So we come back down in there, and then again we expand. So higher high, higher low, higher high. We're still in this overall pullback phase. So where are our last selling volumes? Well, low, high, low, high, low, high, low, high, low, high, low, high, low. And then here's our last selling volume. We also have a consolidation block, and then we expand again. So those two areas of demand right here are definitely valid. Now we haven't come back down into them yet. So 1.6850 psychological level is that first level. We have not come into it. And instead, we're starting to accumulate, and then we broke the structure. Now, not always is this going to be, oh, break of structure, pull back long. It could be. I mean, we had the reaction from the level. We could still easily fall into these two levels and go long. But I'm saying sometimes you'll have the same looking setup to where when price breaks the counter trend, it will pull back in long, or sometimes it will take buy side, take sell side, and then go long. That's why you have to stick to your plan and attack it the same exact way, using the same exact risk over and over and over again, and stop being so concerned about your short-term losses and short-term wins. Right? Focus on the long term. That's the most important. So anyways, counter trend. You always tell us, look at the counter trend. Cool, let's do it. Low, high, low, high, low. There was no repricing. I mean, I guess you can call that a repricing before the structure broke, but really it was right in here inside supply that we just busted right through. That's why I dragged this level over, and I said we could have a reaction from here and go long, because technically we did break the lower time frame structure. So if you did take this, cool, good, take some partials maybe. Well, not now, but come next week. And we could just continue to go long. If that's the case, what I would like to see is either just a failure to generate the lower low, higher high, because then that would fully establish the demand and a higher high above that level. So essentially the failure to make the lower low, higher high, and then we look for that third drive, 1, 2, 3, and then we look to buy it, right, at the demand. So either that, or we just go long and then we pull back into imbalance of some kind and go long, right? Something like that. So I'm not going to be looking to necessarily buy. I mean, if you're already in this level, cool, like just keep stops below the low, right? No need to do anything with that. But that's what I would look for re-entries. Or if this is actually going to be that fake break of structure to entice buyers, and then we come down, take the stops, entice sellers, and then go long and take their stops, that would be that type 2 manipulation. And at that point, I'm comfortable with placing and keeping my buy limits from these levels. But also at the same time, if price actually does do that, then what we can do is not only have our levels here, but also when the break of structure occurs, understand that that was a buy to sell to buy. We can look to pull back and then go long again. Okay, that's how we can take the higher time frame structure, scale in for lower time frame entries. So that's what I'm looking for on GBPCAD.
Tired of missing trades or spending hours at the charts? Introducing my Robot Builders Club. With our platform, you can build bots in minutes, not weeks, without any coding required. Get lifetime access to my video course, VIP community, and over 40 ready-made robots. Works with MT4 or MT5, and as a bonus, you'll get 3 months access to my robot lab, where we build and test bots on live calls every week. Join the hundreds of traders who are trading smarter, not harder. Click the link in the description to learn more, get the free training, and download a free robot.
Again, guys, pause the video at any point in time because I know I talk fast. I have a lot to go over. So be sure to pause it if you want to write down notes or mark this stuff up on your charts as well. GBPAUD. So we can see the theme of pound strength really starting to take place, right? We're looking for pound GBP USD longs, GBP CAD longs, GBPAUD longs, stuff like that. So again, GBPAUD is very similar to our previous pair, GBPCAD, in the sense that we haven't necessarily come down into objective yet, higher time frame objective, but we've still broken lower time frame structure. So could we pull back and go long, or will this be a liquidity run for a final sell side liquidity run into our level to go long again? Either one will be fine. There's no telling. There's no right answer. The right answer would be to do both, because who knows? You manage risk for both trades. Okay. So structure wise, we're bullish. Same thing goes here. Could we go like this? Well, what would this look like if that happened? It would look the exact same thing as it happened over here, guys. Look, higher high, buy side liquidity run, sell side liquidity run. So we took the trend line liquidity that formed and these equal lows coming into demand, mitigate, then we make the real move. Same thing could happen here. You could sweep this high, take buy side, run sell side, come into the demand, and then make the real move. That could happen as well. You can see how this stuff happens over and over and over again. So Lower or higher time frame structure, right? This is where we had that trend line liquidity. We had the break and retest. So retail is going short, and then we went long, obviously, because retail doesn't know what they're doing. Which creates the break of structure. So low, high, low, high, low, high, failed, higher, high. And there was another repricing here that never mitigated that. So 2 levels of demand. Those are our higher time frame objectives, which if price does come back down into them, we'll still be looking for longs. Also, I also mentioned 1.89, but it came a little bit lower into this level. Nonetheless, we had multiple positions. From a couple weeks ago, we discussed there was a level here. I discussed this level in case we were to just go high, low, high, low, high, low, high, right? Or medium-term pullback, sweeping sell side in here into 1.89, which was that imbalance. Also, this previous structure here we could come into. Or if we come deeper than the overall structure points. So we had multiple levels just in case it may have continued with the lower time frame or had that overall retracement. In this case, it did option 2, which was to come into 1.89. So we created this trend line here, 1, 2, 3, 4 touches. Retail's buying with this trend line. Guess what? Sells off, takes their stops, attracts sellers below the breakout, and then we go long and then take their stops, people who are selling. Also, this is also a head and shoulders fake out and go long, right? So we came into that level, and now we have broken counter trend structure, low, high, low, failed, higher, high. So we're looking for pullbacks to long it. So that's definitely our first option. So if we pull back down into this imbalance, into our last selling volume here, we have about 1.91. It's a little bit higher, 1.91075 would be that level. And then what could happen, because we do have equal lows here, is we could come back down, sweep sell side, come into this accumulation, and go long around 1.9 psychological level. If it breaks, then, that's why we're managing risk. Then it'll look like the sell side run into our higher time frame objectives, and then these buy limits can then stand valid. Okay, so that's what we're going to be looking for on GBP AUD, GBP USD. So this is very interesting. Now, this is something that comes with a lot of experience. So years and years ago, what I would have thought is that, okay, well, we have an objective here. We need the price to come back down into it. Go to the hourly. Oh, we didn't do it. We failed to make the lower low. We made the higher high. Okay, so now we should pull back into this demand and go long. Years ago, I would think that that is the best setup in the world. Now, through experience and through many, many failures, I've realized that, okay, I need to be more patient with myself, especially because we've swept buy side and had the immediate reaction. Is price likely to come into here knowing that we still have an objective to fill? Likely not. We're probably going to take buy side, take sell side, and then go. So that's why we were able to have this very, very tight stop loss here, about 41 pips, which is pretty good on GBP USD, right? So this is about a 1 to 8, almost a 1 to 9. And what we're going to be looking to target, just previous highs, right? So 1.3150 psychological level, or if you wanted to go and swing this, because we are overall bullish, you could come back up into 1.35, which is a little bit of an imbalance. But I mean, 1.35 is a very high sensitive region for GBP USD. It's like a monthly level, if you want to call it that. But anyways, we just kept mitigating orders, right? We swept liquidity, came back down into that sell to buy right here. Okay. Started to expand. Sell side liquidity runs, sell to buy, reprice, higher high, higher low, mitigation. That's what caused this sell to buy here. And then if we scale into this move, you'll see on the lower time frame, I'll just go to bar replay and go to a lower time frame here. Within that 15-minute doji, that repricing, or the 10-minute, well, maybe I'm thinking of a different pair. I knew I had something to do with the 10-minute for something. Anyways, repricing at that point in time, came back, came up, took buy side, came down, took sell side, and now we're expanding. So we're in a little bit of profit, and I would like to see continuations to the upside. Could we sweep sell side to start this previous low to then go long? Maybe. That could happen, but overall, my bias is long. I'm looking for longs. Okay. NZDUSD. So same sort of deal. It looks very similar to AUDUSD. So from the higher time frame perspective, obviously we're still bullish. This is just some sort of overall pullback. We've finally broken the structure here. We're looking for pullbacks to continue long. We have a supply level higher time frame that we're looking to achieve. Coming into this higher time frame, demand had the reaction after sweeping sell side. This is just all higher time frame stuff. The same thing applies to lower time frame, guys. Markets are fractal. So we're looking for that expansion now, right, into that level, 6-7. Dollar weakness would be that catalyst. All right, so let's scale in 4-hour time frame. Let's look at the structure. Well, like I said, equal lows, not really equal, but sell side liquidity. We came into a higher time frame demand, sweeping sell side liquidity, and from then on, we started the trend. High, failed to make that lower low, higher high, higher low, higher high. If you scale in to this level here, what you'll notice is that price came into the support, made it resistance, made it support again. Very sensitive region, in the process sweeping the sell side liquidity here. Ascending trend line, just like we had the ascending trend line here. The same stuff, just on a lower time frame. So counter trend, again, you hear me saying the same things, guys, because it's that simple. Low, high, low, fail, higher high. That's where the pullback stopped. We failed to make the lower low here, and then on the lower time frame, we failed to make the lower low below that low. So these two levels create the repricing event, because that's our last supply that we came into. So when we make a higher high, we break it. That's why we come back down into that level perfectly. Then what happens? Type 2 manipulation. Run buy side, these equal highs. 6 a.m. Eastern time, start of New York session, come back down, really when equities open here, 8, 9 o'clock, sweep sell side, mitigate the level, again, drawing liquidity prior to coming into the level and then making the real move in the market. Everyone else is swept out. The big fish are now in, and we need to be trading with the big fish and not the tiny minnows, okay? Because you're going to get eaten up. We can also see, from a counter trend perspective, low, high creates the supply. Low, high, failed to make the lower low, higher high. Guys, I'm applying the exact same things I'm talking about on the lower time frame, but to the higher time frame as well. Top-down analysis is so important. One time frame is not more important than the other. Everything happens on the same time frame. The markets are fractal. I'll say it over and over again until I'm blue in the face, but it's the truth, right? We just need to practice that. So we look out from the higher time frame perspective. Cool. High, low, high. Where's the counter trend? Low, high, low, high, low. And that was our last. If I scale into this, let me just get rid of these drawings. We scale into this. We can see imbalance, last selling volume. This would be an area of interest for us. Lower time frame, okay? What we could also see is we've made a low, high, and here we're in the counter trend phase. In here, I would have never have looked to sell it. Why? Because we could have easily just reacted off that level and went long. But instead we didn't, and we made another lower low, creating more sell side liquidity. Do you think this would be a low in the market? No, we're probably going to run all of these lows, including that low. So that's why I was comfortable upon a pullback to sell it again from supply. Counter trend, because I knew the objective sell side had not been met yet when price was right here, right? In this range, okay? So that's exactly what happened. And what do we do again? We generate liquidity. We had that supply, that failure to make the higher high, the range, high to low. This made that low. This low made that high made this low. This low made that high. It's all structure. That's why we came into that level beautifully. But before that, we generate liquidity. 1, 2, 3 touches. 1, 2, 3 touches. We're wedging ourselves. Oh my gosh. We break out. What does retail do? They buy it. What do? We sell it. Okay? If you're retail, you're going to get eaten up. Okay? Lower low is made. Objective we've come into that objective. 6-130. We've taken the sell side. Could we come lower and sweep this low to start, maybe even deeper into our final level, into 6-1? Potentially. So if we come into this level first and have the reaction, I probably won't be looking for shorts here. However, since we're still counter trend bearish, even though we've come into the first level, if we get a pullback into our supply here and the imbalance here, I may look to take a small position to try to maybe potentially short it if it does have one more drive into the low to sweep Friday's low, which will likely happen, right? We'll sweep previous week's low. That's what happens usually at the start of the week. And what I mean by it's not just the previous week's low, it could be the previous week's high. In this case, we're counter trend bearish, so naturally it would be the low, right? Don't get that confused. So could we potentially come up into these 2 levels and fall? Yes. And then we have 6-1. So all I'm trying to say is you can look to hedge. Those are that. My overall, I'm long on XXXUSD. Short term, we may have one final drive, but overall, you can see the levels. Okay, a couple more left. USDCAD. So with USDCAD, let me just get rid of this now. Sorry, guys. Let's get rid of all this stuff. Okay, cool. Okay, with USDCAD, are we bullish or bearish? Well, higher time frame, we are definitely bearish, right? We're making lower lows and lower highs. However, I couldn't find any selling opportunities. It was more of just a counter trend long opportunities because we had some dollar strength come into the market this week. So overall, USDCAD, what happened was, and this is why we can be looking for counter trend opportunities in an overall bearish market, because when we've made a low, we've made a high, we've made a lower low, we had the reaction. Could we have just continued? Yeah, sure, but we didn't. We stopped. And now we're starting to mitigate demand and have this overall retracement. So I would probably say this imbalance in here, maybe this area of buy side volume could act as, area of supply, or maybe we sweep buy side into our higher time frame level because that's an expansion. This is an overall pullback. This is an expansion. We could see an overall pullback for another expansion. That's something we could see. So 1.35 psychological level, big level on USDCAD. Okay. So that could happen. But anyways, even if we are to go short, it probably needs to be from this level or somewhere in here. We haven't reached either of those. We're counter trend bullish. So the probabilities are the counter trend is favorable right now. So I'm not saying never trade the counter trend. I'm saying that if your higher time frame objectives haven't been met yet, AKA here and maybe somewhere in here, it hasn't been met and we're counter trend bullish and we have setups to counter trend, then boom, there you go. Treat each trade like it's its own. Okay. Scaling in. Go to the 15. So let's look at every single level of demand. So in hindsight, I would never have bought it here because it could have easily made a lower low, right? Could have easily done. We're bearish. But the fact that we came into that demand and stopped and then made the higher high, now I can potentially look to counter trend it. So make the higher high overall. We come back down, generate liquidity. 1, 2, 3, 4 touches. What is this also? A little tiny head and shoulders. Minor shoulder, huge head, minor shoulder. Sell to buy. Enticing sellers below the breakout of the neckline. Coming into the inefficiency, but also the inside demand. Because we never had a reaction from it and failed to make the lower low and made the higher high. We just blitzed right through it. So that's why we have the inside demand. Okay. Notice how I'm using the same terminology. It's just the same stuff over and over and over again. That's why it's so important to have a confluence checklist and your rules. If your rules are met, boom, every single time you place it, regardless of if you win or lose. That's it. Anyways, higher high, higher low. Counter trend, it's not very obvious. We've made that overall higher high. Same sort of deal happened again. I would probably say that, yeah, that's a repricing. And here's the last selling volume. So really anywhere in here, that's probably fine. And it's fine. You would have had the initial mitigation if you had done it like that. But we ended up coming back down one more time. And that's sort of what happens sometimes, guys. You may have the counter trend break right here. You may come down and mitigate. That's fine. But look at it from a higher time frame perspective. When you make the higher high, what is this now? Higher high, higher low, higher high. So could we have a higher low that's technically lower than your entry, but still maintaining structure to go long? Yeah, we could. So that's why if you have the entry here, maybe take some partials above the previous high, the previous swing high. And if you want to move your stop, you can, but just know that we could sweep sell side liquidity, which you had your entry right here, but still maintain the structure because until we break this level, we're still bullish, right? And look at what happens here. 1, 2, 3 touches. Again, head and shoulders. Fake out, sell to buy into an inefficiency in there. Everything is planned. Everything has a purpose. Look at this trend line. 1, 2, almost 3 touches. Again, this touch kind of was a retest here. We broke it and retested again. How many people do you think, how many retail traders do you think are involved in this trend line to some degree? Probably a lot. So if you put 2 and 2 together, if retail's involved here, short, look to go long, right? So what happens? High, low, high, low. We now made the higher high. So what do we look for? Counter trend. Low, high, low, high. We failed here. We had another consolidation block before the expansion. So 2 levels, demand, and then that demand in there. 1.32, psychological level. Where do we come into this morning? Boom, to the T. What do we do beforehand? Generate liquidity. Oh, touch, generate it. Sell to buy. Boom. Okay, great. We had the entry this morning. We saw the sell to buy. Now what? Counter trend again. Low, high, low, high, low, high. Sell to buy. Reprice, continue. Area of demand. Boom. Another entry. And now we're in profit again. Same stuff over and over and over and over and over again. Okay. So what could happen? We could come back down and sweep Friday's low, have that sell side liquidity. Either way, I don't think we're coming below this low. We may sweep sell side, so the internal structure in here, we may sweep it, but overall, I think we're going long. On USD CAD, at least. Okay. For the short term, at least. Okay, so that's USD CAD. USDJPY. Anyways, so I talked about UJ from 139 and 138.335 a couple of weeks ago, I believe. Or maybe it was like last week. I'm not quite sure. Maybe it was 2 weeks ago. I think it was, actually. Yeah, so I may have talked about it on a previous pre-market analysis video. But anyways, structure is bullish. High, low, high, low, high, low. Yeah, we've come up into this level of supply. We did distribute, so could we come up into that supply and short? Potentially, right? I'm not saying we're going to, and I'm not just going to place a sell limit there, right? But that could be a level of short. And if it's going to short off, that's probably where it should. I said if. So until then, I think 143.5 is a good target because we're still bullish. That's the objective for right now. But overall, we're still definitely bullish, as we can see. Screaming longs. And it's not USD strength that's doing this. It's more yen weakness that's doing this. Yen across the board is extremely weak. Okay. So let's see. We sweep sell side liquidity, sweep it, come into previous structure, and then have the reaction long. So when we have the reaction long and we then fail to generate the lower low and make a higher high and start to become this in this pullback phase, where do our eyes go? Well, if we're overall bullish, we can definitely aim for a higher high, which that would ultimately be your target. But I guess short term, since we came into this higher time frame supply and had distribution, your eyes would go towards the distribution. Sorry guys, with all the messages. Distribution with the buy side liquidity. Excuse me, not buy side liquidity, buying volume. That last up thrust before the down move. So that's the objective. We haven't come into it yet. We have room. So any buying positions or setups are probably valid. So I looked at it here. For the sake of time, I'm not going to go over all of it. I'll just stick to this time frame. We had an area of demand here. Obviously, you would never look to buy it right there. Why? Because we could have easily made a lower low, right? But instead we stopped, made a high, made a higher low, and then a higher high. Now we're in this pullback phase likely, okay? So in the process, we sweep short-term liquidity. What do we do here? We take buy side, we take sell side, and we take buy side again. Sweeping sell side into demand, failing to make the lower low, instead making the higher high. Where's the counter trend? Well, there really isn't a counter trend. It's really just this. But we can see here, we have that doji, we have this consolidation, really the last selling volume is before we make the higher high. Okay, so really right in here, do we have any psychological levels? Well, yeah, 139, 138.5. And in this case, I think if we just scale into a lower time frame, let me just do bar replay real quick, guys. Oh yeah, 10 minute last selling volume, overall last. It's not always the last selling candle, guys. I say the last selling volume. Where's the orders? Because the 10-minute last selling candle and the 6-minute last selling candles right here. Which one's correct? Well, stop looking at candles. Look at orders. Look at blocks. Look at where volume starts to push, right? So we just go to the 10-minute. That's why we have this level up here, because that's the last selling volume, right? That kind of mitigated here. But anyways, imbalance a little bit, and then that last sell to buy, right? Overall order. So 138.335 had both of those levels met today. Boom, again, with the news that came out, if you had buy limits and sell limits, or excuse me, buy stops and sell stops, you would have gotten flushed out of the market both ways and you would have lost money. Stupid. Why did I also look to buy it here? Well, pull a trend line. 1, 2, 3 touches of this trend line. Retail's going short. There's buy side liquidity. Okay. We're in both of these. Congrats. Huge potential. 1 to 7, almost 1 to 8, and then 1 to 3, almost 1 to 3.5. Up to 143.5. If you target the higher high, you could have definitely a higher risk to reward. Anyways, potential re-entry opportunities. Well, accumulation, manipulation, buy side, sell side, reprice, continue. That would be that general block you'd look for. And since there isn't really a clear overall level, I mean, your demand would essentially be right here, right? That repricing before the higher high. I want to go 140 psychological level. And then, there's the 10-minute. Okay, that's what I was looking for. 140, and then maybe that little repricing here. Obviously stops either below this low here or below the overall low. Okay. Anyways, USDJPY should definitely continue long for sure. NZDCAD. So NZDCAD and AUDCAD are very, very similar. These will be our last two pairs. So I'm going to try to keep this hopefully under an hour. But so the AUDCAD. So I'm struggling if I should talk about this from a top-down perspective, because I know I've already mentioned this plenty of times before. Anyways, we have an area of demand. That's all you have to know. We broke the structure back to the upside. We pulled back. We came into that level of demand. Okay, let's just take a look at what's going on in here. So technically, are we still counter trend bearish? Yes. Low, high, low, high, low, high, low, high. Could we make a lower low? Absolutely, we could. Where's the last buying volume of supply? Well, really this is, but within this, we have a little block right there with the huge imbalance that formed. Right, so that's exactly why we came into that level, and we took a sell. So congrats if you're still in that trade. So definitely targeting 0.8, which is a psychological level, and a lower low from that selling area. We also had the mitigation of that demand. We came into that level. So could we see this as a break of structure to the upside? Sure. If you want to look at it from a continuation of selling, you can hedge it, you can sell it, and then buy it, because we're technically still bearish. So you would classify this as a liquidity run. 1, 2, 3 touches, fake out, go short into supply. Or if you want to look at this from a higher time frame perspective, from the higher time frame demand that we came into, sweeping sell side liquidity, came into it, and then break of structure, then you can look to pull back and long it. Both are acceptable. So just because the higher and lower time frames are not in alignment with each other at the moment. So anyways, lower time frame, 1 hour, counter trend. We had the low, high, low, high, low, high, low, high, failed, higher high. We just busted right through it, really. Just huge imbalance. That's just why I have that overall block. If I extend that out, and if you look here on the 1 hour, you can see that little repricing. And we kind of tapped into that perfectly. But I wouldn't be surprised if we had one more drive. If we are to go long, I wouldn't be surprised if we had that low taken before continuations. So we'll just wait for the counter trend to stop. Maybe look for some sort of breakout, maybe a type 2 again, maybe buy side, sell side break, and then we look to pull back and long it to fulfill the accumulation. Something like that. We could look for that. What we also have, and this is where we took a short from this week as well, within the counter trend, if you extend your trend line 1, 2, 3, 4, 5 touches, there's so much sell side liquidity resting below that, and you could almost see this as a potential shoulder, head, and a potential shoulder formed. If you hadn't had noticed this, if you were trading just like that, you could see this as, okay, a shoulder, head. We could come up for a shoulder and then a fake out and then go long. So for the shoulder to form, let's look at the counter trends. Supply, lower low, lower high, lower low, lower high. Supply, lower low, overall retracement into that level. We have the excuse to sell it within the counter trend here because we haven't come into objective yet. And the fact that we could be forming that head and shoulders, which would naturally be looking for the fake out, which would take price lower, winning the trade right there to then go long. So a lot of information. But again, that's sort of how we can look at it from a top-down perspective. In terms of potential setups, I really don't have much. Again, like I said, we've already come into the objective point. We may run sell side one more time before going long. Who knows? We'll just see what happens throughout the week. I'm sure I'll be talking about NZDCAD and AUDCAD come next week. I'm sure something will form at this time. I don't see a setup that I like. Nothing. I want to see more price action first is what I meant to say. All right, I want to see more price action. So at this time, we're definitely looking to go long. However, stuff could change. VIP, you guys will be updated. Same situation with AUDCAD here as well. We've come down into a higher time frame objective. And before we did that, because see, we stopped short of the demand. We stopped short of it. What do? We take buy side. These equal highs, we take buy side, we take sell side, and now we're starting to go long. So could we go long? Absolutely. But are we still technically bearish? Yes. So we have to just be careful. But I like potential longs because CAD Chef is falling. We could see NCAD rise. ACAD could rise. So CAD weakness. We're looking for USDCAD continuations long, at least for the short term. So USDCAD could rise. So CAD weakness could come into play here. But anyways, let's look at the potential area of demand. Well, when we came into this level of demand, not only did we sweep liquidity, but the counter trend was broken. Low, high, failed, and then that's where we started the uptrend, right? So that's that last selling volume here. And in the process of coming back down into it, we can just see, obviously, the trend line 1, 2, 3, 4, 5 touches. So likely retail is going long with the trend line. There's sell side liquidity. We could sweep it and then go long. So that's why we have a long bias. But also, kind of a skewed shoulder, head, shoulder, fake out, continuation long. And then within the counter trend, if you took this that we sent out this past week from that level, low, high, low, high, low, high, came up into it once, swept it again, stops are above the high, no big deal, we didn't get hit, boom, profit was hit. There you go. 0.88, look at that to the T. See how, notice the demand lines up with 88000 perfectly. All right, so again, AUDCAD and NZDCAD, I don't have anything too pertinent. We're in very interesting levels though. We have come down into the objective point. So now it's just, what are we gonna do? Are we gonna flip higher time frame, we're gonna go long, or are we gonna continue with the lower time frame shorts? We'll have to just see through lower time frame price action and what price wants to do throughout next week. And especially since we have unemployment data coming out on the CAD and the US dollar for NFP, definitely will provide a lot of volatility. All right, guys. So anyways, thank you for tuning in. I hope you have all these levels down. You're not going to want to miss out on these. If you have any questions, please feel free to reach out. I'll be more than happy to answer any questions you have. But if you want to learn more about how I find these levels and I trade this on a day-to-day basis, feel free to head over to my website, aerialfxtrading.com. Book a free call with me. I'd love to talk to you about how we can best help you and set you up for success and help teach you not only the skill, but provide you with daily analysis and trade ideas that you can take advantage of as well and follow along like we are every single week within our community. So anyways, guys, have a great weekend and happy trading come next week.